this post from Arthur Hayes, which is a major name in crypto and the co-founder of BitMEX exchange, does have a lot of weight and pull when it comes to the opinions and even the sentiment in the crypto market. And now he's covering how Tether and the folks over there are running a massive interest rate trade, and how when he read the audit, they think that the Fed will cut rates, will crush their interest income. And so in response to this, they are essentially diversifying or hedging by buying gold and Bitcoin, which in theory will create a situation where Bitcoin and the crypto market will moon as the price of the dollar falls, right? A lot of people look at digital assets and say eventually they're bound to go up because of the reverse carry trade of massive amounts of debt and inflation and the collapse of fiat currency. So where will wealth need to go? It'll need to go to crypto. But then he goes on to further state that a 30% decline in gold and Bitcoin, which is likely going to occur if we are in a bear market. We always see at least a 30+% decline in Bitcoin and far more in the entire crypto market when we are in a bear market, could essentially wipe out the equity of USDT and make them insolvent. So now he's stating, get ready, get your popcorn out and watch the fireworks fly. And here he is posting the audit directly from Tether and the assets that they currently hold, which is essentially what secures their business with the stablecoin Tether, right? If they're issuing stablecoins, they have to back it 1-for-1 in cash reserves or cash equivalents, or even a basket of assets like gold and Bitcoin. And so this is just one of the major risks we're witnessing in the market right now. And again, a crash in Tether will cause a lot of the bottoms to fall out from all of these other cryptos, which would then send Bitcoin nuking, which will force MicroStrategy likely to sell some of their Bitcoin. And then you have Peter Schiff, one of the largest haters of Bitcoin and the crypto market, stating that this is the beginning of the end for MicroStrategy, as Michael Saylor was forced to sell stock not to buy Bitcoin, but to buy US dollars merely to fund MSTR's interest and dividend obligations, which seemed to be true because with a post this large with 1.8 million views, there would have been plenty of community notes suggesting that this is a complete and flat out lie, even considering Bitcoin Archive talked about how it's defamatory and libelous. But I do believe that this is true, and we'll cover that in a second, where he states the stock is broken. The reality is it's not, nor is Saylor the biggest con man on Wall Street. And we have to remember, whether you love Michael Saylor or hate him, a collapse of his company will destroy the crypto market for a little while, because he's consistently one of the largest buyers and holders of the mothership of crypto. Either way, in the process of selling the stock, their stock did dump quite a bit, and Strategy built a $1.44 billion cash reserve to secure Bitcoin dividends. The Bitcoin Treasury Company, formerly known as MicroStrategy, now just Strategy, raised the reserve through stock sales at favorable prices. So this does seem to be true, which kept their debt levels low at 11% loan to value. They also added another 130 Bitcoin to their holdings, bringing it up to 650K. And I think his goal is to never sell the Bitcoin over the next 30-50 years, right? At an average cost of about $74,000. Either way, they're going to be able to cover their loans and dividends for the next 70 years if Bitcoin grows even just modestly. So again, right now we are experiencing FUD when it comes to Tether, and these types of things tend to come out of the woodworks when you're seeing the market operate really weakly, or we're seeing a trend to the downside. But when you see Tether FUD, you start to see one of the largest Bitcoin holding companies and their FUD. So with all of that said, I went ahead and asked Grok and ChatGPT to give me the likely outcome and scenario, just realistic lows on the entire crypto market, but more specifically Bitcoin, Ethereum, XRP, Solana, and Doge, and the prices they could hit if Tether became depegged in the same way Terra Luna did, or the company went insolvent. And ChatGPT gave me a scenario where we'd experience immediate market shock, which I totally agree. We'd see cascading liquidations, a flash crash. Many people would call it a black swan event. Contagion would then last over the next hours and days, where centralized exchanges would disable USDT withdrawals. And essentially, you'd have a bank run of epic proportions, which would lead into a crisis of trust, which always occurs when we see a collapse in some form of currency. And in the case of a mild panic, we would still see a $25,000 Bitcoin on the very, very low end, full systemic crisis between 12,000 to 15,000 on Bitcoin, which take us back to the prior all-time low of 2022, which when you really think about it, that's not that long ago. It's only been about 3 to 4 years now. Ethereum on the low end would hit about $850, on the higher end about $1,500. XRP would hit about 32 to 40 cents and potentially even 10 to 15 cents, where Solana would be between $40 to $15, and then you'd see Doge back down to about a penny or less. But I do believe Doge has quite a bit of support and already hasn't seen as much hype this cycle as it has in past cycles, and hasn't pumped as hard as other assets like XRP and Solana this cycle as well. Either way, a collapse in Tether would cause contagion and a trust crisis in the crypto market, to which we had Paolo Ardoino, and excuse me if I'm pronouncing that wrong, basically the CEO of Tether, talking about the FUD, and from his latest attestation announcement for Q3 of 2025, how Tether will continue to maintain a multi-billion-dollar excess reserve buffer and an overall proprietary group equity approaching $30 billion. How Tether at the end of Q3 of this year had $7 billion in excess equity on top of their 184.5 billion stablecoins reserves, another 23 billion in retained earnings as a part of the Tether Group equity. And so right now the Tether Group's assets are greater than that of their liabilities. But we have to remember, if these assets go down by 30+%, that would look a lot different. And it's also important to note that in the past, when we saw a crisis of trust in stablecoins, virtually all stablecoins at some point in time became depegged in 2022, and most of them failed or had to restructure, whereas Tether was actually able to handle the stress test of a bank run and was able to hand out about $7+ billion to people who wanted out. So the stress test was a bank run, it was a crisis, and they did last through that scenario. But it's possible we could experience some sort of a bubble type scenario where things are way worse this time than the prior time. And so although I do believe a scenario like this is extremely unlikely, I also believe that we are now in a new phase of the market, which I would call a bear market, because the price action and charts are showing me that. So unless we see the Fed really step in with some QE or lower interest rates rapidly, the trend is likely to continue, as the trend is your friend. Now, what I find super interesting, however, is that Grok and ChatGPT always come out to different scenarios and outputs. But in the case of this type of an event where we see Tether really drop heavily and arguably become insolvent, it came out to a lot of the same exact numbers or within a range. For example, Bitcoin on the low end would hit 17K, Ethereum up to like 650, XRP down to 30 to 45 cents, which would be a major range of support. Solana down to 13 or 20 bucks, and Doge yet again at about a penny, leading to a crypto crisis unlike anything we've ever seen. And arguably buying in these ranges would make a lot of people very rich.